What's up, y'all? In this video, we're going to be discussing trends, minor trends, major trends, counter trends, you name it. We're also going to be talking about consolidation, So, let's go. All right. This right here is called the uptrend. All right. In the previous videos, we discussed the candlesticks and learning how to read support and resistance. So I hope you guys watch those videos, and if you haven't, go check those videos out. And hopefully they can help you understand this a little better if it seems confusing. And it's not hard, trust me, guys. I actually learned this while I was incarcerated. So if I can do that while I was incarcerated with no internet access or anything, surely you guys can do this as well. With, the ability to go online and trade from your phone. So, don't feel intimidated at all by this information. Because I know that tends to prohibit people, from getting started. You know what I mean? And you don't need to be intimidated by this information. But, okay, so this is an uptrend, right? Right here, boom. This is what is called an uptrend, all right? Uptrends create higher highs and lower lows are created by downtrends, but higher highs are created by uptrends. So, for example, if I was to see a chart, right, and I was to see this happening, what happened? You had a positive good day, another positive day, then another bad day. But the bad day is what didn't discourage the reversal or the pullback. You know what I mean? It just pulled back. So after it pulled back, it went up. Okay? So this is what's called a trend, an uptrend. You know what I mean? This is right here, just these candles. And usually when it's trending, most of the days are going to be positive. All right. Now, this is a minor uptrend. This is not a major uptrend. But I'm just trying to give you guys an understanding of how to read and the difference between an uptrend and a downtrend. An uptrend creates higher highs, while a downtrend creates lower lows. All right. So your higher high would be right here. Boom. Why? Because it's going higher than the previous point. Boom. It's going higher than the previous point. It went higher than this. Boom. Okay, so in the last video I shared with you guys, we discussed resistance and support. This is your resistance. This is your support. It breached that. You know what I mean? And then it kept going up. So it continued to create a higher high. Boom. All the way up in here. All the way up to until that point. You know what I mean? So right here, this is a candle as well, but because it opened and closed at the same exact price point, we call that a doji, meaning this is a reversal point right here. So this would be considered what is called a doji. Again, when it opens and closes at the exact same price, that means that a reversal is about to take place. So take note, guys, of that, and remember that. Keep in mind, because that's very important. So notice what happened. It pulled back one candlestick. It pulled back one candle and then created a doji. And what happened after the doji was shown? It started falling and created a pullback. Now, the reason why this is a pullback instead of a downtrend is because it tried to go back up a little bit but failed. You with me? So this was an uptrend, a minor uptrend, until this happened and this happened. This is the retest, meaning it was retesting this area. As soon as you saw that it wasn't strong enough to repeat and go to this area, and then as well it breached that previous support. So in addition to this being a retest, retesting what, Gabe? It's retesting these areas. It's retesting this particular area. So once you saw that it went back down, but not only did it go down, it breached your support, then that's considered what is called a downtrend, a mini downtrend. That's a minor downtrend. It's not a major downtrend, but it's considered a downtrend nonetheless. So what happened? Because it started creating lower lows. You with me? Lower lows. It was creating higher highs at first, but then it started creating lower lows. The lows kept getting lower. So whenever that happens, it's a downtrend. Simple. It's not hard. You know what I mean? For those of you who never heard of this type of strategy or never heard of this, don't let this intimidate you, because it's not hard. Okay? It created a downtrend, a mini downtrend, a minor downtrend. It's all the same thing. Now, what happened after that? Boom, it created a consolidation. Consolidation means that it started trading sideways. Period. Let's say, for example, if you had a particular stock, or if you're trading currency and you had a particular currency pair, so let's say you had USD Euro or USD versus the JPY, Japanese yen, right? And it's trading at, let's say, you know how crazy these Forex numbers be. So let's say it's boom, you know, and I don't want to get too far into that, the actual numbers, because we're going to get to that. But let's say if it's right here, boom, and it keep going sideways. You know what I mean? So this candle represents this. Let's say, for example, this candle was represented by this price point. In this candle, it changed to, let's say, 850. Boom. The doji, when they get back to the doji, is going back to the 28. Well, 1.38828. You know what I mean? So it go right back to this. When the doji represents the price that is going back to, because it closes. Remember, the doji open and closes at the same price, and you know a reversal is more than likely to take place whenever you see this. Whenever this occurs, a reversal is more likely to take place, especially when you got more than one. Okay, so let's say this candle, it went to, let's say, 830. It's still going within a trading range, meaning there's no significant movement other than within this particular range. We call that consolidation in the trading world. That's consolidation, pretty much. You know what I mean? It's not moving. It's standing still. It's going a little bit up, a little bit down, but it's no clear direction. And when that happens, it's consolidation. So keep that in mind, because that's very important. All the terms that I'm telling you guys are simple terms in the trading industry, and these are terms that you need to familiarize yourself if you're going to learn about trading. You know what I mean? These are important terms. So keep in mind the uptrend, the downtrend, and consolidation. Your consolidation phases. That's real important that you remember that and keep that in mind. Okay, right here. So, going back. It went up for a minute, created a resistance, fell back down, created a support, went back up, and formed a minor uptrend. After that, it pulled back down a little bit, created a doji, then pulled back a little bit more, creating a support. Then it did a retest. So this is your retest. It did a retesting the previous high, but it fell back down, breaking your support, further confirming the downtrend, creating lower lows, meaning the price on the next candle is lower than the previous candle. It created support here, then started consolidation. A consolidation phase is moving sideways. It started moving sideways. Then what happened? The downtrend continued. So there was a continuation with the downtrend. And usually when this happens, you'll see multiple negative candles. You know what I mean? Likewise, when the uptrend is in process, you'll see multiple positive candles. You with me? So the downtrend continued. There was a continuation in the downtrend. You with me? Lower lows was created. So again, uptrend, boom. This is the uptrend. This is the downtrend. Why is it an uptrend, Gabe? Because it's creating higher highs. Period. Boom. Higher highs. HH. Why is this a higher high? Because it's higher than the previous point. It's a higher high. Higher high. Higher high. You with me? Likewise, lower low. LL. Boom. This point is lower than that. Boom. Lower low. Well, let me get a better chart. Boom. Lower low. All these are lower. It's going lower. You know what I mean? If I was to draw candlesticks. Boom. Lower low. Boom. You feel me? Lower lows. It's going low. The points. And forgive my drawing. I know I ain't the best. I'm not a Picasso or anything, but you get the point. It's going lower and lower. Higher highs, lower lows. Higher highs are associated with the uptrend. Lower lows are associated with the downtrend. Whenever you see higher highs, that's typically an uptrend and vice versa. Okay? Now, you need to fully be able to read charts by understanding the stuff that I'm telling you guys. So far, we have covered how to identify open and close price points on candlesticks. We covered support and resistance. Now we're covering how to read a trend. Okay, these things are very important, guys, because, you know, things are going to take off a little faster from here on out. You understand? Because next we're going to get into indicators. All right? But for now, let this sink in as far as understanding the difference between a higher high and a lower low, because those are the requirements for an uptrend and a downtrend, as well as consolidation, meaning this particular instrument sits still. Let's say, for example, if you had a stock, and in the stock, when you bought it for $50. But let's say during the week, let's say if you bought it on a Monday for $50, on Tuesday, it went to $50.30. On Wednesday, it went to, or it closed, let's say on Tuesday, it closed at $50.30. On Wednesday, it closed at $6. You know what I mean? On Thursday, it closed at $5.50. On Friday, it closed again at $6. That's a consolidation phase, meaning the stock didn't do much. You with me? It didn't really go anywhere. It just consolidated. You with me? That's called sideways trading or a consolidation phase or period. You with me? Now, if that particular stock, let's say, for example, when you bought it on Monday, let's say if when you bought it on Monday, it declined Tuesday $5. So let's say Tuesday, now it was trading at $45. Wednesday, now it declined $5 more. It's trading at $40. Thursday is trading at $35. Friday is trading at, and I may have skipped the day, but you get the point what I'm saying. Friday is trading at $25. So it went from $50 to $25. That's what's considered a downtrend right there. You with me? That's a mini downtrend because it continued to fall. There was no break. There was no pausing. The price continuously fell. You with me? That's considered a downtrend. You with me? Vice versa. Let's say, for example, if you got in at $50 and that next day, which is Tuesday, it went up to 55. Wednesday, it went up to 60. Thursday, it went up to 70. Friday, it went up to $80. That would be a $30 profit you made. Correct? You know what I mean? That would be a $35 profit or $30 profit that you made, or the $30 that price has went up. That would be considered an uptrend right there. That would be a minor uptrend. Why? Because it kept going in the same direction all those days. Even if there was a break or a pullback, you know what I mean? Even if, let's say, for example, Monday through Wednesday, it went up from $50 to $80. You know what I mean? But then it went back down on Thursday to, let's say, $75. Then it went back up to $90. That's still an uptrend. The break in price point, the little breathing area, that is called a pullback. That means that the market has to breathe. That's a pullback. So in every single trend, there is going to be a pullback. You know what I mean? But it doesn't disregard or take away from the fact that there's an actual trend that's been identified. So take advantage of that. You know what I mean? And keep that in mind. You know what I mean? Uptrends, downtrends. Uptrends, downtrends. It's very important that you understand the difference between an uptrend and a downtrend. Because in order for you to move forward in terms of understanding the indicators that I'm finna show you guys, you are going to have to remember and be able to identify an uptrend and a downtrend and a sideways market. So those are the three requirements that you're going to need in order to comprehend what I'm going to share with you guys moving further, you know, or moving forward, as I should say. But I appreciate you guys again for checking me out and, you know, taking the time out of your busy schedule and your busy life to hear what I have to say. I really appreciate you guys and whomsoever chooses to tune in. I promise you guys, you will be rewarded many times over for lending me your ear. You know, until next time, peace.